Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, October 22nd, 2024. It's 1 o'clock p.m. exactly as I'm starting the video number 2 of the day, and in this one we're going to cover some trade ideas in the cannabis sector. Believe they're actionable at this point in time. Going from memory, I think it's a total of 3 states that's on the ballot for this time around, including my state, Florida, which is obviously a very big one. So that could be a net plus for it, or not. Again, in the near term, and you already have a good number of states that have already legalized it, and you have both presidential candidates who are open to removing it as a class 1 substance and making it into a lesser. I mean, it's up there right now with, what is it, cocaine and heroin, all these major drugs. So they're, talking about taking it down to like a class 3 narcotic or whatever it is. I'm forgetting the terminology there, but so that would be a net plus for it as well, especially, at the federal level, because that hasn't happened in a while. Regardless, when you have things like this, the buzz, and I've seen it before, before they legalized it in Canada and in various states, you get the traders coming in. And one thing that I think is hard to argue right now is the stock market has become a casino. And it's funny because this article came out today, and just a few weeks ago there was something I was going to share with you, and I forgot to bring it up in video. So this is from the Wall Street Journal today, going on to talk about how the stock market's just outright become a casino. The latest trend is these new class of ETFs that are coming out called battle shares, where this has nothing to do with investing. This is just pretty much gambling on 2 companies. They'll pair up. They use the example, if you have one coming out, will go long Tesla using a high degree of leverage, and then short Ford. So obviously if Tesla goes up, Ford goes down, you do well. If they both go up, then Ford's gains hurt the fund. Again, just another form of gambling, just like these what do they call binary options, 1-day options expiration. Everybody's getting into betting whether the stock market will close up or down for the day. And then when I read that article today, it prompted me something I was going to share with you a few weeks back and just forgot to do. I got this email from Interactive Brokers, and it's since gone live, I believe. They got acceptance, if I'm not mistaken. But we now have, you can bet if you want, futures contracts on who's going to win the election. Will the Democratic Party win a majority in the Senate? Will they win, majority in the House of Representatives? So yeah, the stock market, I've lived through bubbles. I've read a lot of books on bubbles and things like that, and the human psychology. This is it. We're in a casino type market. Now that thing is, it's fine. You go to Vegas, your odds. Well, hopefully, your odds are against you if you step into a casino. But if you want to gamble, as far as the stock market goes, it's more about, at least we have an edge. We can look at the charts, and then go use. I guess everyone has their own strategy. I'm not a big gambler. I don't like casinos. It's not my thing. But I know blackjack players. You have your own strategy. Even roulette players and all that. But again, that the odds, if you're smart enough, the odds are against you. Unless you're counting cards, and again, the casinos I think use too many decks to even let you do that now. And if you are good at that, they're going to sniff you out and keep you out of there. But either way, let's not digress. Let's jump on this. So with the elections coming up, a few more states set to at least put it on the ballot to vote to legalize it, and then more and more talks of the federal government not outright decriminalizing it, but at least changing the categorization off of Schedule 1. Anyway, so it's technical say bye. It broke out just the other day. Well, really today. I can play around with my downtrend line, but you don't have to squint to see this breakout there. This is MJ, by the way, guys. There's other ETFs out there. Pick your favorite. MJ was one of the first to market. But you can look around here and see all these different cannabis ETFs. You could see MOSOS. You can see this one breaking out above resistance. Already took out the downtrend line. A lot of these coming off divergent lows. So I'm just going to rifle through my list. This one also had, I don't track all of these, but Yeah, MJ is the one I followed for years, and I look at the components of that one and this one. So I'm going to go over some of the ones I have in the watch list. This is simple stuff: wash, rinse, repeat, divergent low, you rally, get your double-digit gains. That's what these are always good for. Triple digit, that was 105% rally. This drop here was good for about a 50% drop, which is comparable. Remember, when you drop 50%, you have to then go up 100 just to get back where you started. So you can look at these previous reaction highs as potential targets. Let me just rifle through some of the names that I track. And you can see these lines are there because of stock splits. But right now you have a minor downtrend line. ACB is just starting to crack. This is Aurora Cannabis. I already covered MJ. You can just screenshot these. I have to be honest with you. I haven't updated a lot of the levels, but I can tell you that is still a potential swing target. We'll call it max swing target at this point in time. And that's I have it at about 470 or so, 460, 470. And I could certainly give you some additional targets in between. And if you're interested in the sector or any of these individual stocks or ETFs, let me know. But I'll give you right now first target about 366. I'll maintain that one about $4 second target, and then what I tell you, 460ish there for MJ, giving you a total, if that final target's hit, about 35%, potentially more. We'll see what happens after November 6th. I'm clicking through in no particular order. I have several watch lists of cannabis stocks. Here's CRON, Kronos Group, breakout right now. Again, a lot of these charts I haven't updated in a while. Looks like I didn't fix that divergent high there. There it is. So this is it. Wash, rinse, repeat. Divergent lows. We've traded these on and off over the years. What happens is, like on any stock or sector or index, I go dark on it if there's just not a lot in the charts worth mentioning, and then all of a sudden I'll pick back up. So this one, boom, breakout, and that's why I'm doing this video. OGI, Organogram Holdings, breakout right there, downtrend line breakout. Again, right now here, let me just keep it simple. You can set stops below these breakout points. Give it a little room if they want to back test. For example, this one has some horizontal support there, about 172. It's trading at 188 now. And just ride it up. Ride it up as long as this momentum, as long as this game of musical chairs. Again, there's so much risk-taking in the market right now. But the broad market, like let's be clear. I covered that in the beginning of the video, especially, the leaders, the tech-heavy NASDAQ 100. It's been over a month where we've gone nowhere. We've just been grinding around. But there's these little pockets of risk that the Reddit traders and the old apes and whatever you want to call them, GameStop, the meme traders, they're going to jump on these too. So, and like anything, it doesn't work out. And like anything, these are very aggressive. I like to take a shotgun approach. Either you use an ETF, you're a little more safe there, or if you're going to do the individual names, don't pick one. I like to take, half dozen or more, sprinkle a little bit of what I call Vegas money in them. That allows you to use a little bit wider stops because the profit potential is high double digits to triple digits when these guys run, when you have a trend change. OGI, last divergent low right here. You can see that one was a run of about 60%. That was here. You had a divergent. No, you kept going. Oh, that was a bigger divergent low right there. That was the bottom, and this thing ran about 200%. So all I can tell you, it's breaking out right now, and it's just breaking out. So you set a stop, let it run for the time being. I'll update later on with additional targets. And again, sometimes things go quiet. The trading has been a little. Market's been kind of slogging around. Comments have been down. My posts have been down. So, if I don't get feedback that you're in these, then I'm not going to update them. But if I do, then I'll give you updates as often as you want. There's the first target there. That'd be about another 18% from where it's at now. This is CG2C, one of the best looking ones right there. Nice bullish divergent low, positive divergence. Last time we had it right here. Positive divergence there. You can see created back whenever that was, that trend line there. 454% run. So that was another explosive run. So that's the nature of these guys, and they're just breaking out today. So even though it's up 20%, that one not too late in my opinion. Tilray, TLRY, poised to break out above this downtrend line. We already have a bunch breaking out, so I imagine it's going to go. I'm just clicking through the other ones. This is Canopy Growth. I already covered CGC and the U.S. shares on the Toronto Stock Exchange for you Canucks. TS that trades on the TSX. It's your symbol is WEED, WEED, breaking out today. There's another one that went kaput. You can see these are all, I've had these watch lists for years. This one's right at support, not necessarily a pure cannabis play. Some of these that I have in my watch list are cannabis related. They're pharmaceutical companies that work on compounds related to CBC or whatever you call it. ACB, Aurora Cannabis, minor downtrend line, just starting to crack that trend line. And I haven't updated the chart in a while, so I'm going to give you that, shoot for that reaction high I think traders will look at. There's another reaction high right there, maybe a little hiccup along the way. I'd say about right here. Well, we'll put it right on that previous reaction high. All right, so those are your potential targets there. MJ already covered. That's the ETF. I'm just clicking through Chronos. I might have cycled through this whole watch list. Let me go to a different one. I have a different watch list here. Here's one more. And again, I'm doing this in no particular order because I have not had time to mark up all the charts. This is an indirect play. This is a REIT. They must have had it in my watch list forever, so they must lease out to cannabis related companies. There's an uptrend line, so I'm not even gonna, I don't like the chart. It's in an uptrend, but it's got big divergence building. And again, I'm just clicking my space bar and it cycles through the watch list. Some of these I'll have to update because I haven't done so in a while. Boom. Beautiful downtrend line. Pop. This thing's going to run. Typically, guys, the smaller the companies, in price and market cap, look at the market caps. Certainly the higher the risk. Some of these companies just go kaput. They're not making money. And legalization in Florida may or may not benefit. A lot of these are Canadian companies, may or may not benefit them. So it depends, where there's a lot involved here. All I can tell you is people really don't do their due diligence. They just jump on the sector when it starts to run. And again, the gains are potentially explosive. So what I like to do, carve out what you can, if they're high risk, very high risk. Say, what's your, I call it your Vegas money, whether your number is $10,000, $1,000 or 500,000 or a million. You want to put millions, a little tough. A lot of these are smaller companies. You're going to move the market, but whatever your number is, put that in, set your stops, give yourself some relatively wide stops and place them strategically or tactically. In other words, if you break out here, you can see that you have an uptrend line right there, little triangle pattern. You don't want, stop for me would be somewhere in there, max right there. It shouldn't fall back below there if the breakout fails. But these guys, they usually, when they start to go and they break out, watch, I'll draw a beautiful little trend line right there. Same setup. They don't look back. So that's why I'm doing this video, get it out to you quick before too many of these run. If they do run, and if they don't, they don't. It's like any other trade. It plays out or not, pans out or not. ACB already covered. Again, I'm just cycling through there. I might have, I'm on a new watch list. It's a different one. A lot of the same components that are in the other watch lists I started out with. Cara Therapeutics. This is another biotech company. But you can see right there's the downtrend line, price resistance at 37 cents. It's become a penny stock. We've been trading this one for years, on and off, long and short. OGI popped right there. Organogram, I think I already covered that. I'm just clicking through this fast to see if there's any that I didn't. Again, another Toronto Stock Exchange listed one, HMMJ. That's ETF, actually, Horizons Medical Marijuana Life Sciences. And you probably see, I don't want to force a trend line there. I'm not liking that too much. I think that's it, guys. I'm cycling through this. Again, a lot of Canadian shares. If you are Canadian and you want me to, go over some of these or give you price targets for the Canadian listed shares, let me know, and I'll be glad to do that. I've got a lot in there. You can see how many have just gone to the wayside, whether they went bankrupt or were taken out or merged or whatever else. CBDS. Ooh, look at that downtrend line. Again, this is a penny stock, guys. When I say Vegas money, I mean that. What does that mean? It's what you're going to walk into a casino when you go to Vegas in your pocket, knowing you're probably going to lose if you're you should have that mindset, and you're going to just gamble for enjoyment. But, again, we're doing this not just random. If you spin the roulette wheel or pull the one-arm bandit, the slot machine, it's just complete random chance, and the odds are against you. But when you use technical analysis, the odds are in your favor. So, I will at times take these, and I'm going to nibble on these today after I do this video. I just wrap the other one up and decided to take a look at this sector because I had a mental note over the weekend to do so, reading up on, everything that's going on with the elections. And that's it. So, all right, you can see I didn't have time to call through there and go over my favorites, but I did cover my favorites in the video, the ones that, kind of look at that. Here's what I do when I this is an ETF, but when you look at the individual stocks, look at the price, look at the market cap. Sometimes price can fool you. You can have a higher price and a small, tiny market cap, a little micro cap stock. They can play around, reverse split, do things like that to get their share price higher. So look at the market cap, most certainly the share price. Anything trading below $1, especially $2, is higher risk. Look at where they trade. Are they on the pink sheets bulletin board, or are they listed stocks? And then where I'm going with that is typically your penny stocks, the smaller market caps, use a smaller position size. So that whole shotgun approach, again, your number is your number, whatever that is. Let's just say you're going to put 10 grand in the pot stocks right now and ride that up as long as the momentum is there and it looks good. So you're going to do that. You're going to have the pie, and your pie is going to look like this. You're going to have the small ones should be a smaller sliver of the pie. The big ones, or maybe an ETF as a core holding, and then you can wrap that or supplement it with some smaller individual names. But again, with those penny stocks, very small slivers of the pie, because you don't need to put a lot too. Those are the ones that are going to go up triple digits, 100+%, 200%, 300%, 400 sometimes, if the sector continues to get momentum. And likewise, if it goes the other way and the bottom falls out, and then you didn't put that much money, and you can allow yourself, because you do need a big, much wider stop loss. If you are shooting for 50 or 100 or 300% return, you can't run a 5% stop loss on a stock like that. You will get stopped out in the day-to-day gyrations. So, risk reward goes hand in hand. If you're shooting for 50% return, you can give yourself a 15, even 20% stop loss allowance. That's a reasonable risk reward ratio. At least 2 to 1, obviously 3 to 1 or better if you can do it. All right, I'm going to wrap it up here. If I come across any that I missed, I will follow up in the comment section under this post, or I'll follow up with another video tomorrow or later this week if we continue to see additional breakouts. But so far, I have enough of the sector ETFs breaking out and enough of the big names, the ones I followed for years, the bigger, better capitalized companies there. So there's another target for MOS right there, 818. I'm going to pull that down, 818, 990. And obviously, that would be a max target, 1321. And traders like these reaction highs. So there's your 3 targets. You can screenshot it. 1, 2, 3, minimum from where we're at now, about 6.7%, all the way up to about 71% in this ETF here, MSOS. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.